Total MLS sales increased 3% year over year to 5,391 homes, representing the highest July result since 2021. However, activity remained well below normal sales at about 30% lower than the 10-year average. Hey there, I'm Matt Sloan, and I'm a realtor here in the Greater Toronto area. And if I could ask a huge favor, if you could hit that subscribe button, it would mean a lot, as I'm really working to grow my new YouTube channel. And if you don't mind, if you like this video, leave it a thumbs up. Now, buyers continued to remain patient in July as interest rates are expected to continue moving lower, and there was plenty of inventory for them to consider. The overall Greater Toronto Area real estate market moved firmly into a buyer's market in July. The sales to new listings ratio remained below 40% for the third straight month, falling to 33%, the lowest July level going back to 1996. Now, I know this could be all wishy-washy with, just throwing out numbers, so I really wanted to pull up the graphs here and give you a clear picture on what was happening through the months of July, and kind of similar as we have had the last couple weeks in August here too. So take it as we go, and I'll pull up these graphs to kind of give you a little bit more of a picture of the demand indicators, the supply indicators, and eventually leading to the price indicators on what we've been seeing here lately. So this first one with the demand indicators, we see the total MLS sales here for the July periods ranging from 2015 to 2024. As you can see, as I mentioned, this past July, we had 5,391 sales for all home types across the Greater Toronto Area. And, even though that's up over the last couple years for July, it's well below that 10-year average that sits just over 7,600, just below 7,700 sales for the month of July. Now, going into supply indicators, we can see how much supply we have on the market right now. Over 23,000, almost 24,000 active listings right now in the Greater Toronto Area for all home types. So we can see that's well above the 10-year average for this time in July, which is normally just over that 16,000 active MLS sales, active listings across the GTA here. So a ton of listings out there for buyers to choose from. A lot of which though are carried by the condo market, which we can get into a little bit more later. But again, a ton of listings in the on the MLS right now for buyers. We can see here, and when we look at months of July, this number is very indicative to how the market is going, and it really helps us predict things going forward with the way the months of inventory is trending. Again, as a reminder, below 3 months of inventory, we're in a seller's market. From 3 to 5 months of inventory, we're in a balanced market. And above 5 months of inventory, we're in a full buyer's market. Again, this can change depending on the area and the trend that things are going. So if a market only has 4 months of inventory, but it's trending upwards, it could still be in that buyer's market instead of a balance. And vice versa, if we have 3 months of inventory, but the trend is going downwards, then we could still be in the seller's market. So it's very important to know where your area that you're either looking to buy or looking to sell in. Very important to know the months of inventory and the direction that it's heading. So as you see here, we've been really on an upward trend with almost 4.5 months of inventory across the GTA. So really headed towards that strong buyer's market right now. Still in a little bit of a balance in some areas, some really smaller areas, and could still be trending towards the sellers, but for majority, we're in a balance and really in a buyer's in a lot of areas across the GTA. If we look at the months of inventory, months of supply for each home type, we can see here the condo market is in a full-blown buyer's market right now. We have 6 months of inventory, and we have not seen that type of inventory in the condo market in a very long time. So if you're a buyer looking for a condo right now, there's opportunities out there for sure for you. If you're a seller in the condo space, you got to be very realistic with your pricing strategy. You got to be very aggressive, and hopefully with the marketing and staging, making it look a lot better than the rest that is on the market, because there is a lot to compete against right now. If we look at the detached market, we are headed just over 4 months of inventory. Again, this depends on the area that you're in. You will see more inventory on the market than other areas. So right now in a balanced market, and for that semi-row in town market, we're at 3.5 months of inventory. Again, trending upwards, similar to the condo and detached space. In a balanced market, but again, you could, and depending on the area across the GTA that you're in, you could find yourself in a seller's market still. So just depending on the months of inventory that you have in that current market. So again, important to be aware of that. Now, how does all this reflect the price? Well, the price indicators, as you can see, prices have held pretty steady throughout the year. We're at just over 1.1 million right now, and we've had a little dip this past month. But again, this is typical for the season, for how things have been going. And again, compared to last year where we were really coming out of as a pretty competitive spring market, you can see we're still hanging around, so just over that $1.1 million range. So this kind of tells me we're at kind of the bottom of price point right now for the year, or at least for the next few months. We'll see what happens when November, December comes. Again, back to the seasonal change. But with the Bank of Canada predicting the lower rates, especially in the next couple weeks here, and possibly 1 or 2 more times before the end of the year, we could see prices start to creep a little up again. Again, I don't think it's going to be anything too high or too low, but we'll see a little bit of movement in the upwards direction in the next month or two. Again, now this next one, it just shows you kind of the price point for average sale price, and when you break down each home type, so detached, condo, and semi-row town, you can see again the detached market hasn't really changed too much compared to last July. The semi-row town has dropped about 2%, and condo about 2% as well. Again, when comparing this July to last July. So not too much movement in terms of price when considering how much inventory has hit the market lately. So we would have expected to see much more of a price drop with all this inventory, but price is still holding relatively steady. And lastly here, I really like this one because it can really break down your area that you're either looking to sell in or looking to buy in with months of inventory. For example, the Halton region for a detached home right here is about 4.5 months of inventory. And for a semi-row town, we're about 3 months of inventory. If you're looking at the Peel region, you can see up about 5 months of inventory for detached and 4 months of inventory for semi-row. And condos are just, like I said, we're in a buyer's market for condos almost right across the board here. If you're in Toronto East, for detached and semi-row town, you're still in a bit of a seller's market out there. So again, really depends on which area that you're looking to buy or sell in. So important to note of months of inventory. So if you're talking to your realtor or if you want to reach out to myself, I'm happy to dive into those markets a little further for you. So to sum it up, the July results indicated that the second consecutive 25 basis point interest rate cut by the Bank of Canada to 4.5% in July slowly started to move some buyers off the sidelines when you see compared to last year. The impact was mostly felt within the low-rise segment, and the Bank of Canada indicated that further interest rate reductions can be expected so long as inflation continues to ease. And with the news that we had about inflation dropping this week, we can really expect to see another rate drop come September 4th. The 2-year Government of Canada bond yield also fell to a 2-year low, and the 5-year yield declined to its lowest level since May 2023, indicating that home buyers can start taking advantage of falling fixed-term mortgage rates as well. So fixed rates will be about that mid 4% range right now. So anyways, thanks for watching, and if you like this market update, please like and subscribe, and I'll see you in the next one.